folks. Welcome to Sunday Night Futures Live. This is Bob Desmond, and it's a glorious day here in New York. I spent the day, for the most part, by the pool early on, went to the gym, came home, ate a high-protein meal, and then I had a cigar and a couple of margaritas. And then I cooked for my family, and here we are now. An awesome, awesome day, a beautiful day in New York, and glad to be here. Hope everybody had a great weekend. I laid out in the sun, completely dehydrated. The futures are open, and what we're going to talk about tonight, I don't have a ton of headlines to go over. I got to be honest with you, I am hugely, insanely ticked off with CDC, the government, with regard to the insane information coming out of the lies that we were told. We always knew it. We always knew it was a lie about these vaccines, lockdowns, etc. I'm going to go over a few of them. And the only reason why I'm going to go over them is not to get political. It's to show you that the people in charge, the deep state, are destroying this country, and they are going to damage this market in advance of the midterms and in advance of the 2024 elections, because they do not want military tribunals. And that is what must happen here. So let's begin with the futures action. I know I'm coming off a little bit intense today, but I'm really pissed off about this news I'm about to share. S&P 500, initially we opened up higher, but we are now negative. But I'm not seeing a lot of follow through to the downside here. So let's do this. We'll throw up an alert. You know, at the beginning of the week, what I care about is us making new higher lows, higher highs, and then I get a feel. It builds. It's intuitive. I get a feel for how the markets are shaping up. What is the momentum? Upside, downside? Those are the S&Ps. Let's go to comments as they filter in. Hey, Trish, I was thinking about you today. I swear to God, I was thinking about you today. I don't know if you're on Twitter, but I went on a tirade earlier this morning about news coming out about Pfizer, because I believe it was you that mentioned that you wanted to short Pfizer a few weeks ago. And I'm looking at the headlines coming out from one of the CDC directors, and I'm like, my God, what does Pfizer look like right now? Are we ready to short this thing? And unfortunately, I looked at the chart. It looks like it wants to break out. So no, I'm not ready yet to go. But I swear to you, when it's time, I am going to be going all in on Pfizer short, because I don't think it's going to happen until after the midterms. But at some point in time, they're going to have to come out with a piercing of the veil, the what do you call it? The immunity veil due to fraud on Pfizer and Moderna for that matter. And we're starting to come apart here. And then we're going to be looking to short those names, especially when there are congressional hearings called, investigative hearings, and then we're going to be looking to short Pfizer, Moderna. I don't know if AstraZeneca is traded here in the United States, but hello to you. Glad you're here. Pete, what's up, brother? Good to see you. Chuck, hey, Chuck. Denny, hey Bob, great to hear about the gym from you. My wife and I are gym rats for over 30 years. Yeah, if I don't go there, I'm a basket case. So yeah, I try to make a point of getting there as much as possible. Tomorrow's a rest day, so I'll be up early getting a lot of work done. But usually Saturdays, Sundays, I don't have to worry about the phone ringing, and I just work out hard, and I get back to the pool during the summertime anyway. Talon, hey, what's up with you, brother? TZ Burton, Good afternoon to you. Trader Isaac, I know you left a message for me, a symbol. I got to go to it now while I'm thinking about it. If you can you throw that symbol that you requested on one of the videos into the chat box so that way I make sure I get to you? I don't want to waste people's time. I should have had it marked down, not your fault, completely my fault. Uh, let's go on to Lewis. Happy Sunday to you, sir. Paul, hey brother, how you doing, man? RL, you handsome devil. TZ Burton, downward turns in the market is always a good opportunity. Yeah. So that's a great point you bring up. I like to go into Mondays with a high net lick. For those not familiar with a high net lick means, it's high net liquidity. It's not the percentage of your buying power you have available. It's a percentage of your capital you have available. So, tomorrow I did a lot of options trades on big dollar stocks, Lockheed Martin, Tesla, at the back half of the week. So I had a lot of capital tied up in high probability trades, but it absorbed a lot of my capital or my AKA buying power. And so when I woke up on Saturday morning, I looked at my buying power. I was like, wow, I have a ton of capital ready in reserves. So in reality, to your point, I don't care whether we go up, down, doesn't matter. We're selling premium. So that cash flow generation machine, the key to keeping that game going is your net liquidity, having that buying power to be nimble and to shuck and jive. Paul, doing well? Good. Don't bet against Pfizer right now. No, I'm not. No, I agree with you 1,000%. No, Pfizer's chart, I looked at it, and that's why I posted it on Twitter, that you should not go. Where are my tweets? I've been on this thing for years. Tweets. I still don't know how to work it. All right, here we go. I would love to short Pfizer stock, but the charts, not yet. So the charts are still very, very strong for Pfizer. We're at the lower end of I'll call it a bull flag setup, a very long one. And there's a strong probability that it breaks out. But I think that after the midterms, there's a good chance that you're going to get news that comes out. That CEO they have he's a demon. He's a lizard person. So that guy is going to have his head on a dartboard and they're going to come after him. So at that point in time, once you get the chatter about piercing their immunity, that is when Pfizer, Moderna, they are roadkill. These stocks will be roadkill. So, yeah, I agree with you 1,000%. Soon, but not yet. TZ Burton, cash flow is important. Yes, it is. Yes, it is. Okay, let's get back to the futures action. We did the S&Ps. Let's head over to before we leave the S&Ps, we're settling out here. We're holding on to 399.55. I'm not seeing a lot of follow through here, but there are sellers above at the declining 20 period moving average. So let's set up another alert here. It appears that volume is thin, as you might expect on a beautiful July day. Let's see if we get follow through. And that's what it's all about. Okay, let's move on. Let's talk about the Nasdaq. Nasdaq's holding up rather well relative to the S&Ps. That's odd. We do have a bearish reversal bar. This is only a 15-minute candlestick, though, so let's keep that in mind. Very, very volatile. Don't put too much faith into it. Again, we rallied into the 20-period moving average. Not much follow through here. Let's put a loose alert down here, very loose. Let's see if we get some momentum to the downside. Folks, I got to be honest with you. Before we get into this, I did the week ahead commentary yesterday with members, and my net on this market is that I do not believe, absent a geopolitical event, all right, let me caveat it by saying that, absent a geopolitical event, I do not believe that we're going down this week. Friday was an ugly day, but it was a light volume day. Also on Friday, and we've seen this a lot in the past several weeks, that the VIX did not validate or invalidate the S&P move, meaning to validate the S&P move to the downside, the VIX would have needed to move up higher. It did not. So what I conclude from that is that while you had some distribution, mild distribution on Friday, you did not see traders put on insurance. So I need to conclude from that there's not a lot of fear in the market. Fear is coming in. There is somewhat of a bullish setup on the VIX. I mean, it's been really steadily downtrending. You need to get a counter trend move at some point in time. But net, I think that right now, the very short-term path of least resistance for equities is to the upside. Now, can that be disrupted? Yes. We're going to go to a chart of why it won't be disrupted. I'm going to talk to you a little bit more about why it can be disrupted. So, Nasdaq, we are lower on the session after being higher earlier, resistance above at the 20-period moving average. The Russell 2000. The Russell has been holding up fairly well relative to the large caps. And let's go, let's pull back to a 30-minute chart. It's a little bit too volatile for me. I'm not a day trader. Oof, the hourly chart does not look good. Let's take a crayon out here. We have lower highs and lower lows getting put in. Let's bring up the Qs again. We have a lot of Q names reporting this week. Microsoft, Meta, I believe Meta, definitely Google, Microsoft, and I think Amazon and Apple as well. So this is going to be the Pimp Mac Daddy of earnings weeks this coming week, and we will be trading it very, very heavily. We did well last week with Netflix. We stepped away from Tesla. And I'll go into that in a moment, why we did not trade Tesla. I have trader friends of mine that did trade Tesla, and they got burned really, really bad. But the reason why they got burned is the reason why we avoided it, because there wasn't enough implied volatility in Tesla, meaning you couldn't get far enough away from the closing price action to establish a good buffer for a 2 or 3 standard deviation move on the share price. You're talking about a stock that's trading with what, 94 handle on PEs? You got to be careful. I mean, if you don't learn the lesson from Netflix earnings these past couple of quarters, you're never going to. So we walked away from the trade. If we're not going to make money on it up front, the money's made on the buy. You need to walk away from it. Nasdaq stock, Nasdaq index on an hourly time frame, we are putting in lower highs here. And lower lows. So my wheels are churning right now. Come on, mouse. All right, so our alert is set. We have a bit of a head and shoulders setup going on here on the Nasdaq. Left shoulder, head, with a potential overblown double top setup and a right shoulder forming on an hourly chart. Let's take a step back here. Let's take a look at what the US dollar is doing. The dollar is flashing green on an hourly time frame. Let's drill down to a half hour. But net versus the close on Friday, here we are down on the session. Let's see what that is doing for gold. Gold, no bueno. They tried to rally it. Let's see whether or not we could take out these highs. Now, keep in mind that the US dollar last week broke down on a weekly time frame, meaning the week prior to last, we had broken out above a weekly resistance level, a major breakout versus about a year earlier on the US dollar. What did that mean? Pressure on gold, silver, commodities. And on the week last week, we had a breakout point failure, meaning that breakout point, which we had broken out above the upper band of resistance, we gave it back last week. Now, the question is, do they rally the US dollar on a daily time frame? I think they do. I discussed this yesterday on the week ahead commentary, but ultimately, I think it fails because now we are no longer the pimp Mac daddy of the world, meaning economically, the only major currency out there, EU, Japan, yen, and the US dollar raising interest rates. The Japanese are not doing it yet. They probably won't do it. They're net exporters. They're fine. The EU, they are a basket case. Inflation running rampant, worse than here in the United States. They had to raise rates first time in 11 years. So now there is a race going on. So let's see how the US dollar holds up, because now the US dollar has a bit of competition. So we'll throw up an alert here to see whether or not we break out to a new higher high. I am not a big bull on gold right now. I mean, most of the time I am a big bull on gold. I am not at current. We've been trading the options. The week before last, we sold naked puts. We accepted the shares on NUGT. Last week, we sold naked puts. I did not accept the shares. I rolled the trade. I am not as confident. I think we need to see more consolidation here, more weakness on the US dollar. And once the US dollar puts in the double top and breaks to new lower lows, then we go all in on the silver stocks, gold stocks. But right now, be careful with these names. Speaking about the euro, let's see how we're shaping up here. First, I want to see how we closed out the week last week. All right, so last week, what we did is we recaptured what was the long-term lower band of support, became support yet again. I think that we can get, after last week's price action, a new weekly higher high. But I think early on in the week, you're going to see weakness on the dollar. Daily time frame is going to try to rally back, probably lower high, and then we break down to new lower lows. Not that I'm bullish on the euro whatsoever, but I think that the euro is oversold and due for a rally, as is the Japanese yen. Let's go to some comments. Devin, hey brother. Hey Bob, your thoughts on XBI? It's the yeah. We can take a look at that later on. That's a good one. We use LABU, but the probability of the charts looking very similar, probably very likely. The biotechs took it on the chin last week, but I still like the sector because on a weekly time frame, you have a breakout. We'll check out the XBI. If I don't do it, remind me, please. XBI weekly time frame. Let's see how those stokes are rallying. Similar to the LABU. For all I know, LABU is based upon XBI. So that's a good one to go over. Looks like relative weakness in front of the market where it led the markets first. I think it needed a pause. To be honest with you, Devin, it had a very strong rally along with the LABU. I'm using the LABU as my benchmark, making an assumption that XBI rallied the same. That biotech sector rallied very, very strong in the face of a declining overall S&P 500, and I'll say declining / consolidating S&P 500, and for that matter, the technology sector. So I think they need a break. And they did rally up into resistance, and we need to consolidate and then see another rally up and into those resistance levels. My wife won't touch auto stocks. Yeah, I don't blame her, to be honest with you. Oh my God. Patrick, hey brother, how you doing? Good to hear from you. Pete, question about 4-hour chart that you always recommend. Love the 4-hour charts. When 4-hour does break from the previous candle, should I wait until the next 4 hours or once it breaks within a 4 hour? Okay, I'm trying to make sure that I understand the question first. Let me reread. When 4-hour does break from, all right, so I'm going to throw out a hypothetical to you. Let's make an assumption to understand that I'm understanding your question first. Let's make an assumption the first candlestick, 4-hour candlestick, puts in a bullish reversal bar or a bullish engulfing bar. And that second 4-hour candlestick either moves up or negates it, breaks down to new lower lows. That break, I'm assuming is that it breaks to a new lower low. Then in that circumstance, if you break to a new lower low versus a very bullish candlestick where you make an assumption that you should be making higher highs, you got to avoid it. That's a negation of that candlestick. It didn't. Just pretend the candlestick never ever happened. It doesn't matter. That is a bear market anomaly. It's very atypical for a bear market where you get a beautiful, absolutely stunningly beautiful setup, a bullish engulfing, a bullish key reversal bar. For those folks that do not understand what I'm talking about, my top 5 favorite candlestick patterns, link below, free tutorial on my top 5 favorite candlestick patterns. Check it out. If you get a negation of one of those candlestick patterns in a bear market, avoid, just walk away. It happens all the time. That's why I always say in a bear market, don't use the intraday charts. Don't use the daily charts. Look at your weekly charts. What are they telling you? Because that's your path of least resistance, not the daily time frame. Way too much noise, 4-hour candlesticks, way too much noise. Avoid like the plague. And just validate my assumption of what you're talking about is accurate. If not, rephrase it. I'll answer your question. EU central bank softening sanctions on Russian. They have to. They have to. They lost the war. This war is over. It freaks me out that they even began this losing war. It was a lost war months ago. Before the first Russian tank crossed that border, the war was lost for the West. I don't know what else to say here. All they need to do, Zelensky, prior to the first Russian tank crossing the border, Zelensky, you're going to go out, you're going to go to the podium. We're going to send you $1 billion. Don't worry about it. You're going to go out to the podium. You're going to say, you know what? We'll join the EU, but you know what? We're not going to join NATO. We're all good. No Russian tanks. They didn't do it. I feel horrible for the Ukrainian people. Horrible for the Ukrainian people. My developers are Ukrainians. Great people. I love them. The government, as my Italian brothers here in New York would say, Alfango. Hey, Bob, Ukraine's done, and Zelensky will be out before Christmas in all probability. If Odessa falls, then it's a wrap. Sure thing. Yeah, they're going to try to wrap up the eastern portion of Ukraine, and then what you're going to see is Russian tanks going home. They'll fortify that the western borders of those new republics, or I'm not sure if they're going to annex those territories or create new republics along them. But either way, this is done. This is done. You're welcome, Pete. And hopefully I explained it correctly, or expressed myself correctly, not explained. Ukrainian people are what they are. They're wonderful people. They truly are. What's been done to them is a war crime. Honestly, it's a war crime by their own government, by the West. It's a war crime. Horrible. It never should have happened. Disgusting. I send Skype messages to my developers every week, couple times a week. How you doing? Just checking in. And sometimes they're good, sometimes they're bad. I mean, it's just terrible, terrible. Intelligent people, nice people. Okay, let's get back to the futures action. Euro weekly chart. We're looking for new higher highs here later on in the week. I don't think it's going to happen in the first half of the week. Let's step back to a 30-minute chart. Let's take a look at other commodities. In particular is this. What we want to focus on here, folks, is light sweet crude. It's critical that we stay below $100 the barrel. Why? Okay, so remember this about the Federal Reserve. The Federal Reserve is never going to admit they got it wrong. They will never admit they got it wrong. What they will do is claim victory. As shallow as that victory and as ridiculous as that victory may be, they will claim victory. So what they want to do is say that they broke the back of inflation. Why? It's because the price of oil, actually, they won't say oil. What they'll say is that at the core on the CPI, the price of the CPI is coming in. It's rolling over. It's moving lower. Short. They won't say short term. I'm saying short term. They will claim victory, and then what are they going to do? They're going to print more money, just as they did last week and the week before. Their Fed balance sheet is moving up higher, not lower. They told us in June that the Fed's balance sheet was going to move lower. It is now higher, and it's supposed to get more aggressive to the downside, the Fed's balance sheet in August. There's no way it's going to happen to crash the market. So this is why I'm saying, folks, in all probability, stocks are going up higher. They shouldn't. They shouldn't. Economic data is coming out horrible. They should go down lower. They're expensive, but in all probability, they're going to go up higher for all the wrong reasons. Okay, so light sweet crude needs to stay down below $100 the barrel. Why? Okay, so you may be saying, Bob, you just said at the core, the CPI, they'll reference the core CPI number, but the core is X food and energy. So what are you talking about? Well, the thing you need to remember is that what are the input costs of those folks, those businesses that do business at the core? Your construction companies, your asphalt companies. What goes into asphalt? Petroleum. But they're still at the core of the CPI. So while their reduction in input costs may go down, it'll be reflected on the CPI. The Federal Reserve will say, we did it. We did it. Our plan of raising interest rates by 1 point while inflation is rising at 9.1%, the admitted number, the real number, probably about 15%, they're going to claim victory, except it's going to be a short-lived victory. So what they want to do is they want to get inflation down at the pump. They want demand destruction. You have unemployment numbers rising. You're seeing you're seeing freezes of employment at companies. You're seeing job cuts across the board. That's impacting pump prices. So what they want to be able to do is, and they're already starting to do it, claiming victory, meaning the politicians. You're seeing prices come down at the pump. The question is why? It's not because they opened up federal land for drilling. It's not because they got concessions out of Saudi Arabia. It's because the economy is slowing. And they're going to show it this week because in all probability, we are in recession. And I don't care what the GDP number says this week. If it comes in flat or 0.01% to the upside to negate the back-to-back two-quarter negative GDP reports to signal a quote-unquote textbook dictionary recession. We have the chart, the one chart, the only chart that matters. That is the yield curve. We're going to go to that in a moment. Stick around. Let's stick with crude prices, because crude prices need to stay down below $100 a gallon or the barrel so that they can claim victory. It's critical. And if you see oil trading back above $100 the barrel, watch equities roll over. It's very, very critical. The other input that you need to keep an eye out for is nat gas. Now, nat gas had a very powerful week last week. I had this up here. Where is it? There we go. Oh boy, look at this. Wow. Continuation breakout. Wow. Wow. This is a problem. So natural gas is up 2%. This is a major breakout. This is a weekly chart. And now we have new weekly higher highs on natural gas. This does not bode well for the euro. The euro is the eurozone is highly dependent upon natural gas. So this is a problem, a major problem. Watch for 890 on natural gas this week. I think we're going up higher. Taking a look at comments here. Sullivan's talking like Zelensky is about to get whacked. That shake. You know what? I'm on thin ice with YouTube right now, so I'm going to avoid that conversation. We do not. This is a family-friendly show, and we do not promote any type of violence whatsoever with regard to. And not that obviously you have not requested that either. How about Ukraine is done? Yes. A couple of these are okay. Hunter Biden smoked Ukraine, no doubt. Is a recession already priced in? No, it's not already priced in. What can happen after Thursday? Okay, so that's a great question, Talon. You always have good questions. So I don't see Yoga Mac on here because normally he would chime in and he would say, as perverse as it is, or sick as perverse as it is, bad news is good news. All right. So if we get a negative GDP print on Thursday, stocks are going up. And you're probably saying, what are you talking about? That's horrible. That's horrible. That means recession. Yes. Yes. That's why stocks are going up higher, because politically it becomes unpalatable for the Federal Reserve to raise interest rates. The pressure is on them to cut, or at least pause, or at least not do. Forget about 1 percentage point increase. 75 basis points is on the table. I think they come in at a half a basis point rate hike. But a negative GDP print on Thursday is extremely bullish for stocks. Extremely bullish. And buy gold. Buy gold, buy gold, buy gold. Why? Dollar tanks. Inflation's still on the rise. Economy's going into the crapper. What is that? Stagflation. You got to buy gold, but only if the dollar tanks. If the dollar doesn't tank, avoid gold like the plague. Bob, I had lunch in New York Monday at a very upscale restaurant, down at 1:30. The place was packed. The flip side is that there was almost no foot traffic. Yeah. It's sad, Louis. I don't even go in there anymore. I just don't do it. I used to go in on Sunday mornings. There's a place down on South Broadway called it's called Felix Restaurant, but I always called it Cafe Felix. And it was a great place. It's down in Soho. So you see I may be a conservative, or, a fiscal conservative, but I always enjoy the artsy things in life. I'm not a hardcore, stick up my butt conservative. I enjoy arts. So I always like going in there, grabbing the New York edition of the New York Times, sitting down, having a couple of mimosas early on in the morning. You watch the Bugattis pull up and all these crazy people pull up, and you're sitting and it's beautiful. You have open cafe doors to the street, all the all the characters that are out there. I just don't do it anymore because you don't know if you're going to get robbed at your table. It's crazy. It's to me, it's done right now. It reminds me of the '70s. Not that I'm that old. I saw pictures of the New York City in the 1970s, but I do remember it in the '80s, and it got cleaned up then. And wow, what a city it was during the '90s and 2000s. But now it's gone. It's gone. Sad. It's so sad. Really is very sad. Snap tried to shadow Google earnings. Uh, so this is a really big tell about the market. This is the second time that Snap has come out with very disappointing numbers, and it's the second time that the market has reacted to a stock that's got a very small market capitalization. So you got to wonder what the street is reading into Snap's reality. And I think these social media stocks are in a lot of trouble because Snap is one of the newer generations of social media platforms. You had, what's the first one? Um, I even forget it now. Then you had Facebook come out, MySpace, then Facebook. Facebook, my daughter, the only reason why she ever got an account is because her college that she was going to forced her to open up a Facebook account for whatever reason. My son still doesn't have a Facebook account, uh, doesn't have Instagram. My daughter hardly uses Instagram anymore. She uses Snapchat. So I think these social media companies are in a lot of trouble if they can't evolve. Like Meta is now evolving into the metaverse. Does that work? Who knows? But all we know is that their core business is not doing well. So uh, things are changing, and it's very concerning that a name like Snap is making the market move. It shouldn't. But what I think the market is interpreting is that, okay, if this is happening to Snap, is it happening then? Because remember, Snap, newer generation, Google, LinkedIn, Meta, those are older. Those are older generations of social media. What happens to them? Right? So I think that's the interpretation of the market or the reaction of the market to Snap's reports. Trader Isaac, yeah, I'm working on it. It's very, very complicated. Rumble is definitely the next generation of where we're going to grow our audience, but they make it very, very difficult to get online there. I mean, very, very difficult. So I'm going to probably get with the people over at Salty Cracker, the Salt Must Flow. If you don't know those guys over there, outstanding team, the Salt Must Flow. Check them out. If you like conservative commentary, and it's really off the wall conservative commentary, buckle up. Not family friendly stuff. So uh, they do stream to Rumble, YouTube, simulcast. I can't do that with my current software. It's very complicated, and I need support from the Rumble crew. So I need to reach out to them and other specialists. But it's going to happen. We are not doctors here on YouTube. True. Texas billionaire bought 50 million in gold and silver 250 million years ago. Okay. I think the street and the Fed will lie to us and say that inflation has peaked. Then you'll see a major rally, but I think that'll be in October. Yeah, they need to make the market rally into November. They got to make that happen because you have the elections. I only post memes on Facebook. Okay. Rumble is tough to start. Yeah, they make it. It's a startup. I get it, but they got to make it a little bit easier. Salty Cack and Viva Fry are massive. They are. I tip my cap to them. Yeah, they are. Okay, let's get back. Natural gas continues to move up higher here. Let's check out corn. Oh my God, is this week or last? Last week. Wow. Ag is getting killed. We're down nearly 0.5% already. Soybeans, they're basing a little bit here. Let's go to a 4-hour view. This is a dead cat bounce on soybeans. Be careful. Avoid. Wheat. Wow. This is where we're going, down here. 713 the bushel on wheat. So wheat remains a short. Rough rice. This is a weekly chart. This is going to break. Rough rice is going to, this is a short all day long. I mean, I wouldn't short it right here, right now. What I would do is this. I would take my crayon out. I would do one of these numbers like this, this, new weekly lower low. That's a continuation breakdown on rice. That would be a short. What else do we have to go over here? Let's take a quick peek at the yen. The yen is, we broke out last week. It was very oversold. I think the yen's a buy. I think there's a short covering rally to be had here on the yen. That will not bode well for the US dollar. It doesn't mean the dollar is going to go down because the yen moves up higher. If the euro goes up higher along with the yen, the dollar goes lower. But you have to have both. The yen can't push the dollar lower. There's a trade to be had here. We may be looking to get long of the yen this coming week using options. We've done it before. We did well with it. Talent, if the market is to rally through November, watch the Fed balance sheet, go with it. It must. It has to. No doubt about it. The Fed will press the panic button by Thanksgiving. Pivot monetary policy. Frank Holmes, U.S. global investor. I don't discount it. What are you doing with Nugget? We hold a position in Nugget, Pat, but what we've been doing is selling naked puts, but not accepting the share. Like the week before last, I accepted shares. I think we're consolidating, we're basing, but I'm not overly confident yet. So I want to see the dollar break. I want to see lower lows on the US dollar. I want to see it rally up into, let me show you what I'm looking for here, if I may be so bold. So what we're looking for on the dollar is this. And for those that are joining in, you're not familiar with what the heck the dollar has to do with gold. Remember, gold is priced in US dollars. When the price of the US dollar goes higher, gold generally goes lower, absent a geopolitical event. Then they can both rally because of fear. But generally, gold trades inversely of the US dollar. Now, the dollar has been quite strong for a very long time now. And we had broken out the week of the 11th. What did we do last week? The week of the 18th, we broke back down. That's a bull trap, a breakout point failure. Does that mean the dollar goes straight down? It could, but I don't think it does. If you go to a daily chart, what I think happens here is that I think that the dollar does this. The dollar will rally after filling a, no, it didn't actually fill the gap. Oh, it did fill the gap. Yeah. It filled the gap. It reversed off the lows of the session on Friday. And you may be saying, well, it was down on Friday. Why are you sounding so bullish about it? Well, the reason why I'm sounding bullish about it is that all down days or all down weeks are not made equal. What we did here is that while, yes, we closed down on the session, we hit two support levels. One, a price support, two, a moving average support, the 20-period moving average, and we closed above both. What does that do? Well, it sets the stage for a rally up higher. And that means that what we might do is challenge the prior high here at 29.20. Now, we're selling naked puts on NUGT, meaning for those folks that are not familiar with what a naked put is that I'm not buying puts on NUGT because that would be a bet that is going to go lower. Recently, that's a good bet. It's worked out for you. I am building a core position. I am looking to sell naked puts to reduce my basis cost to get in at a lower price than where it's currently trading. So the only way that I would accept new shares of NUGT is if the dollar rallies, we put in a lower high, and then what do? We break down to new lower lows. Once we do that, then we know, okay, green light. We don't need to roll those puts anymore. Let's take the shares. Let's take them in. We could sell covered calls at a 1 or 2 standard deviation strike price and continue to generate cash flow. We're always generating cash flow. That's the key to our game. Always generate cash flow. So that's what we're doing right now with NUGT. And IDEO, you do have BA. BA, I think, had a good week last week, right? They're coming out with earnings, I think, this week. Outside reversal bar on Friday. Folks just joining in, there's a link below. My free 5-part video tutorial on my top 5 favorite candlestick patterns. This is one of them. An outside reversal bar, aka a bearish engulfing. Pat, we bought IBM post earnings. I like the earnings call. I don't know why they're beating up the stock. I like it. They're beating it up. Nice 5 handle on the divvy, but they're beating it up nonetheless. Nice bullish key reversal bar on Friday. I think this is a buy. I think you got to buy IBM here. What's the divvy on it now? It's probably more than where I bought it. This is one of the very few stocks. Well, it's about the same. So you're sporting a 5 handle here. This is one of those stocks that the street just gets it wrong, right? You got to take a look. We're in a bear market. We're in a recession. If you want to deny it, okay, deny it until the numbers come out. I choose not to wait for the numbers to come out. I look at the charts, and the charts tell me where we're at. All right, so you take a look at IBM, and you tell me that this is a stock that, while yes, in the very short term, has taken it on the chin. You want to tell me this is a stock you don't want to buy? Look at the quarterly chart here on IBM. You're talking about the Pimp Mac Daddy of flag setups. And we broke out months ago. And the thing about it is, and this is what people don't appreciate and why I bought it. Post earnings is that they reported good earnings. They missed on cash flow by a half. The expectation was 10.5 billion. Give me a little bit of latitude here. 10.5 billion on free cash flow. Actual was 10 billion. Give me a break. Here's a stock that on the year is down 1.71%. You may be saying, oh, Bob, you want to buy that? What's wrong with you? Okay. Here's the S&P 500 down 16.2%. That on IBM is what you call relative strength. I happen to like IBM. I never did before, but I like the setup here. I like the relative strength. I like the earnings. It's cheap relative to the overall market, so I'm going to stick with it. 1,700 or lower, dust. Bastard. How dare you do that to me? Mila, you got it. BA workers having a strike in St. Louis over pay. Thank you, Paul. I think mid-30s this week on NUGT, Pat. Oh, you're talking about IBM. You're talking about IBM. Yeah, I have no problem with that. I think what we're doing here on IBM. Remember, this is a quarterly chart. We broke out the April quarter of 2021. Think about it. Then we retested once, retested twice, retested again, follow through last quarter, this quarter, another retest. I really don't like that again, but a little bit of latitude, volatile market. Okay. We need to see a positive close on the quarter. You see a close above 144.73 on IBM. This stock is probably going up to 175, if not 200 in the next year, assuming that the market doesn't fall apart. Franklin, hey, brother. I think I'm in around that level too, give or take a dime. Hey, Kat. No worries. We enjoy the estrogen in the room, so whenever you get here is fine with us. Way too much testosterone. We need to tamp down the male. What do you call it? The toxic masculinity here. These guys are way too savage. I can't handle it. We need Trish, Kat, the other ladies to help keep things in line. IBM, Etsy, and Google all buy for me due to PE. I don't follow Etsy that much. Etsy's that cheap? IBM, I know. I don't like. I don't like the PE here. Not as I don't think you could put Etsy in the same camp as IBM. I don't think you can. Google, a bit of a different story. You know, this is it's a monopoly. So, and it's sporting less than a 20 handle. I tip my cap to this. Same thing with Google with an L. The quarterly chart's not looking good. All right. Watch out for some VIX volatility, bearish. I won't dismiss that at all. I won't dismiss it at all. Selling covered calls on CAH may work right now. The stock is neutral to a hold. How's your implied volatility there, Larry? And how hot is it in Louisville? We are on fire here. It's paying a divvy. Oh, Cardinal Health. I like this chart, Larry. I like this chart. This is a breakout. At current on the quarter, we're breaking out. Really good looking chart. Yeah, you're right. We're still in a trading range. We don't know whether or not it's going to close above this resistance level. But good looking chart. Thanks. More toxic femininity. We'll take that. Kat, did you? No, I did not. I did not. We'll go over for you. We'll definitely go over for you. Tom, Etsy is good in and out. A trading vehicle. Okay, I got you. 105 in California. Wow. Wow. I think we're up in the 90s today here. Past couple of days. Thank God for the pool, man. All right. So I want to leave some time to talk about your chart requests. I don't know how much time we have left here. 5 minutes. I want to talk about earnings plays. I'm not going to go over the headlines. And frankly, I dragged this out a lot tonight for a particular reason. I didn't want to talk about the headlines I was going to talk about because, frankly, they depressed me. It all had to do with WHO and COVID and all this nonsense and all that's coming out. I didn't want to talk about it. This is why I dragged out the future so much. So if you're wondering why I am completely off script this weekend, there was no news to talk about positively. What we do want to talk about here is this prick, family friendly show. Sorry about that. But I do want to point out this Nobel Prize laureate and what a worthless human being he has always been. Ever since I began my closet business back in December of 2005 of the Contrarian Trader, I had despised this individual. Let's hear what wisdom good old Paul Krugman has for us today. Nobel Prize laureate, you piece of human waste.
Listen, what did you think? What did you think you got wrong?
Well, partly it's that there's stuff that I didn't, that nobody saw coming. Nobody saw
Right.
Putin invading Ukraine. I think nobody really thought about logistics, supply chains, or any of that stuff until suddenly they became a big problem. But part of it is that we did, in fact, end up with what is clearly an overheated economy. And the effect of that overheating on inflation was bigger than his past experience would have led us to believe.
Okay, so you're never going to get that 30 seconds of your life back because it was worthless. This guy is one of the go-to guys that are esteemed economic advisors will go to and seek his guidance for the U.S. economic policy. I can tell you right here, right now, you can go back to my videos back in February of 2020. I told you, I said it here, the supply chains are going to be disrupted forever. Folks, I never graduated college. Here's your Harvard professor, an esteemed Nobel laureate who never saw it coming. This is the problem with this country. People like him need to be mocked and ridiculed as we do here. This is a dumpster fire of a human being intellectually. Talking about economic data coming out this week, we have a lot coming out. Normally, I would say, you know what? Don't worry about it too much this week because you have so much economic earnings data coming out. This is different. You have GDP coming out this week. And yes, you have a Fed meeting coming out. I think that this is going to be a bullish meeting. They're not going to do a 1%. If they don't do a 1%, they're probably going to do a half basis point. Worst that they're going to do is a 3/4 basis point move. Markets got that priced in. Stocks go higher. Consumer confidence coming out on Tuesday. GDP comes out on Thursday. Now, this is, forget about the Fed meeting. Don't worry about it. It means zero. What matters is GDP. Is it finally put into the books that we are in recession? I think that they do. The market is still expecting, I find this very, very surprising, that the market is still expecting a barely positive, let's put it in pink, a barely, because I think it's going to be red, a barely positive 0.3% increase. This is after the Federal Reserve out of Atlanta came out and said, expect a negative print for Q2 to come out. Yet the market is still pricing in a 0.3% positive read. If they report to the downside, stocks go higher, dollar goes lower, yields go lower because the Federal Reserve will be expected to reduce course or change course, pivot, and you'll see if the dollar goes down, gold goes higher. A cool 96. So you're similar to us here. Bob, you already do a Kruger. Thank you very much for that. Patrick Bet David barely graduated high school. He has a successful insurance company and podcast. Awesome. Tell me, GDP will be fabricated to no recession. And this is why I say I'm not surprised with whatever these guys come out with. The chart, you only need one chart. This is a very simple business. First, you have to admit that 90% of what we do is psychological. If you don't master your psychology, you're done. Just avoid it. Invest in mutual funds. So that being said, if you're a trader, you need to use this chart here. Simple. This chart here has called every single recession going back to like 1955. It doesn't go back to 1955, but it's good enough for government work. Here is your yield curve. When the 2-year yield goes down below the 10-year yield, that is a negative yield curve. And that means you're in recession. 1990, S&L crisis. 1999, that was the dot-com bubble. Actually, I'm sorry. This is the irrational exuberance deflationary move. 2000, you had the dot-com bubble. Here, you had the financial crisis. Here, you had COVID. Here, who knows what they're going to call it? They're going to call it something. It's probably going to be the debt bubble, but it's going to happen. So right now, can you buy stocks? Yeah, just don't stay around too long because this doesn't end well. As I've said, each time that we've gone down below a 2-year trading higher on a yield basis versus the 10 yield, it doesn't end well. There's too much fear in the bond market. All right, this coming week, let's talk about trades. We will be doing either iron condors on stocks that have low volatility, yet they're not paying enough on premium, or we're going to be doing massive strangles, very, very wide strangles on Microsoft, Alphabet, maybe Chipotle. There's going to be a lot of capital tied up here, but Alphabet did split, so that's going to free up a lot of capital. Tomorrow night, I don't see a trade here, but Tuesday morning, possibly 3M, possibly Raytheon. We did very, very well last week on Lockheed Martin. That's a defense play. We got really good premiums, and we did very, very well. Coca-Cola, no premiums there. Avoid. GM, I'm not going to trade that. Too many other things out there. UPS, possible. Microsoft, definite. Alphabet, a strong maybe. And Chipotle, a strong maybe. Wednesday, pre-market. Shopify, if I do that, that will only be with an iron butterfly or iron condor. I always get them confused. Iron butterfly, iron condor. Either way, it becomes a defined risk versus an undefined risk trade. Facebook, that would definitely be a defined risk trade unless they're paying us a lot of money to get far away from the strikes on a strangle. Qualcomm, definitely going to be involved with Qualcomm. We usually are. We usually do very, very well. O'Reilly Auto Parts, I would normally trade. They only trade the monthlies there, so I don't like it. Too much capital tied up. Pfizer's going to be a short. Stick around. I'm going to short this sucker. Now is not the time. Unfortunately, it looks like a buy. Honeywell, a maybe. Apple, a most definite. Amazon, that's going to be a defined risk trade unless they pay us a lot of money to go far out of the money on Amazon. Why? The consumer is slowing down. Exxon's a maybe on Friday. It's going to be a busy week. AstraZeneca does trade here. We'll be checking out that chart as a possible short, along with Moderna and Pfizer. I'm going to short those as a basket at some point in time. Once that veil, as soon as you start hearing the veil of immunity being pierced, that is when you want to attack these companies. And it doesn't matter if it happens. It just matters about the conversation. Talon, take care, brother. Be well. Talk to you tomorrow. Krugman got his Nobel for a theory he dreamed up. This never happened. Yeah, he's a Keynesian economist. Basically, he's a socialist pretending to be a capitalist. Not everybody liked Joe Granville, OBV, but let's not forget what he often said about the stock market. It is, if it's obvious, it's obviously wrong. I like that. You always come out with good ones, Larry. Amazon, a concern if they miss could drag us down. Yeah, definitely. No doubt about it. Not saying that it's valid, but I see fewer trucks delivering lately. Okay. That's anecdotal, but okay. All right. Let's do some chart requests and we will call it a night. Folks, this is going to be from our friends over TrendSpider, 35% discount code below. And we're going to go over, I want to talk about the stocks that are going to be, I posted them as trades on the, I don't want to be a clickbait hound. Apple, we're going to talk about these charts and how they're looking on a macro basis. We're not going to go over the daily charts. Apple has broken out. It's recaptured a support level. I like the weekly chart here. So this is a chart that I am willing to put on an undefined risk trade, assuming that I can get far away from the closing price action and get paid. I'm talking about a 2 standard deviation move and getting paid a good premium on that strike. Otherwise, I'll trade it, but I'll put on an iron condor and use some protection, and that'll reduce my buying power reduction. Let's talk about Google. I don't like Google. I don't like it at all. I think Google's going to break. I do not like Google at all. I did not expect to be saying that right now. So Google, unless they pay me a lot of money to get far away from the closing price action, I will not be using an undefined risk strategy. I will be using a defined risk option strategy, probably an iron condor. Microsoft. So I was talking about Microsoft being a short way back here. I'm going to pat myself on the back. Microsoft is a great company. I like Microsoft. This can be an undefined risk strategy. So we'll probably be using a strangle on Microsoft, bullish on Microsoft. Stokes rising, looking very, very good. Let's do a couple of chart requests. I'm going to log off here. Oh, we didn't go over Bitcoin for the lovely cat. So speaking as a guy that dollar cost averages in every Monday with like $50. I don't like it. 22,500 is resistance. I like the Stokes. I like RSI. They're rising. I need to see it close above 22.5 to feel comfortable. And it kind of makes sense, that price point, because if you take a look at where we found support prior on Bitcoin, we're right there. So we're finding a little bit of resistance at the 200 period moving average. We're above support on a weekly time frame on Bitcoin. But what we need to do for me to feel confident, I think that we may get lucky here, is have a pullback and a retest. This is from December of 2020. A retest of 21,986, give or take a buck or two, $10 or two. But we need to see that support level get retested We're above it at current. Do we close above it? I don't know. I'm not that smart. Let's go to a daily view. I like the Stokes. I like the RSI. I like the flag setup. I think there's a good chance we close above it. But watch for a pullback next week or the week after to retest that weekly support level. All right, so we did CAH. Who did I miss? All right, so who else did I miss? We did Boeing. I think we got everybody. Oh, Meli. That's it for our train. That was it. Meli. Mercado Libre. Look at the price on this thing. I like the setup here. I think you need to wait for a breakout. I would not buy it here. If this is one, I don't know if it's optionable, but this is one where I would be interested in selling naked puts to average down your basis cost. I like the consolidation. You have a multi-month consolidation now. But you got to wait for the breakout. Daily view. Yeah, this is my point, folks, is that while this is the power of the automated trend lines, now you don't see them here. Now you see support and resistance levels. But this one here, this is the one I just drew. And there is resistance immediately above. You got to wait for that breakout on Mercado Libre, or else you're buying into a resistance level. So just be careful. I like it. Our train, we got you. You're good. OLL, I think, was for Trader Isaac. And for you folks watching this on the replay later on this evening, if you want me to go over a chart for you, leave a comment in the comment section below, and I'll go over it on Thursday night. And are you bullish, bearish, and why? All right, so I don't like the stock. We rallied up into resistance. We got rejected. We have the VWAP immediately above at around 63 bucks a share. Let's go to the monthly chart. Yeah, I think what we have here is a big short covering rally, and you need a big pullback, a sizable pullback to create that higher low. And that higher low would probably come in around here. Right around here. Around 47 bucks a share. Daily view, you broke down on Friday. I would avoid this stock. I think it goes lower. You bet I'll train anytime, pal. My assumption is SIGA will pop off the monkeypox NWO news. Okay. All right. Falcon, what's SIGA? Is that a stock? I'm not sure if this is the stock you're referencing, but it got hit hard on Friday. I don't like the chart. All right, folks. Folks, smash the like button if you could. Subscribe, comment. Thank you for being here. Everybody have a profitable trading week, and I really appreciate you being here, and be well. Have a great night.